Good morning, everyone, and thank you for joining today's conversation on the Advanced Corporate Treasury, Simplifying Connectivity and Centralizing Payments. My name is Kevin Ruiz, and I'm a principal with Treasury Strategies. I'm pleased to be joined this morning by Bill North, who's the Director of Corporate Solutions at ACE Software, who's also a sponsor of this event. Today, we're going to be discussing the key challenges and opportunities that Treasury departments are facing in achieving operational efficiency, connectivity, and optimized payment centralization and control. As an aside, for everyone who's registered for this session, in a day or two, we will be receiving a copy of this presentation as well as a link to this recording. And also, should you wish to ask any questions, you can do so in the question box in the bottom right-hand corner of your screen, and we're going to be handling those questions at the end of this conversation today. And before I begin, Bill, I guess you'd like to introduce yourself to the audience as well.
I would. Thanks, Kevin, and pleasure to be here today. With my role as Director of Corporate Solutions at ACE, I get to work with corporate treasury folks around the world in analyzing, evaluating, and implementing technology to help them, specifically in the areas that we're going to talk about today, Kevin, which are connectivity and centralization. So excited to be here and looking forward to our conversation.
Great. Thank you, Bill. So what we're going to talk about today is really three things. One, we're going to talk about the evolving needs of the business and therefore what that means for the Treasury function. Second, we're going to talk about what's driving those needs. And third, Bill and I are going to have a conversation talking about some of the solutions and some of the strategies that our clients have looked at to achieve meeting the needs of the organization. So first, let's talk about the evolving needs of the business. For a lot of you on this call today, you're familiar with Treasury Strategies, obviously, but you are probably familiar with our annual State of the Treasury Profession survey and webinar that we do to discuss the results of that survey. We're in our 9th year of that survey, and every year we hear things that are perennial issues for corporate treasurers, such as access to credit, getting all the blocking and tackling in place. But this year we have some unique issues around the following areas: exposure and management of financial risk, questions around centralizing Treasury functions, the need for greater operational efficiency, bank relationship management, and really bank relationship optimization, greater visibility to cash and the ability to forecast cash, better, more consistent, more accurate, and timely reporting, and then cyber risk is also an issue that we heard about this year. Bill, before I move on, I want to ask you, is this kind of the same themes that you're hearing from your clients?
They are, Kevin, and I will add that these are topics in my 15 years of working with corporate treasury folks. These are topics that have been consistent year over year, which also tell me that these challenges aren't going away anytime soon.
Great. Thank you, Bill. So let's talk about what's driving this need. And Bill, I'm going to ask you some questions about this, and I want to get your thoughts. When I think about these top issues, the things that are top of mind of our clients and the people that responded to our annual survey, I think about these main issues in three real categories. One, I think about this in terms of connectivity. Two, I think about this in terms of centralization. And then three, I think about things that are exogenous, that are external to the Treasury function, the different drivers that are also feeding into this area. So Bill, first, I want to ask you something. What's driving this need in terms of connectivity?
So, Kevin, what I see across the Treasury landscape regarding connectivity is just, the growing number and the proliferation of different communication channels. And those could be external, right? Commonly, a lot of my customers talk about, connecting to their external service providers, their banks and whatnot, but also internal, connecting to internal systems or connecting to data sources within the organization that they depend on a daily basis, and sometimes can be quite challenging. Regarding the banking channels and just the proliferation of those, each bank portal typically requires, a token, right, for security. Well, I've come across treasury organizations that have a big bag of tokens. So that's a challenge I'd like to help these guys get away from.
Yeah.
Also, the data sources are changing, right, that you have to work with. So you might have a lot of ERPs, but, your IT guy could walk down the hall and tell you, hey, we're upgrading the IT system, or we're changing ERP platforms as an organization. And those are systems that you depend on. So, they're always changing, always evolving. So that need really never goes away. And then emerging standards and formats. So, Kevin, last month I sat through a conference and I heard about the emerging payment format is same-day ACH, which is kind of built on the ISO 20022 format. I think it'll bring a lot of value to the Treasury community, but again, it's just an additional format that you have to interact with and have to manage. And those, I don't think, as we standardize, that'll be great, but you talk about around the world, you're still going to have to deal with a lot of standards and a lot of formats.
Yeah, Bill, that's really interesting because, we always think about complexity, not just the different standards and platforms and systems, but what we don't tend to think about is, it's not just the external connections with, banks and other partners and vendors, but it's also the internal connections within systems and across platforms. So, Bill, let's move on and talk about some of the things that are driving this need for greater centralization. Help me think about that a little bit.
Well, a lot of corporate treasury folks are telling me that they need the visibility into what's going on around the business, into the flows, and into the points of risk. But they also want to increase control and reduce a risk where possible. And one area could be an organization that has business units sending payments to the banks. That might be a point of risk where if you have less folks initiating payments and sending payments to the banks across the organization, if that's being managed centrally, there could be some reduced risk there. And a recurring theme, Kevin, is data, right? Getting the right data to the right people at the right time. And I think that's a consistent theme, and we're going to talk about that throughout our conversation, but that is something that almost everyone is telling me. And then, the third topic on this is greater coordination with the business units, right? The folks that are out there doing business every day, Treasury wants to support them and want to work with them, right? And the flow of data is important to that, but also centralized visibility, again, is also very important to that.
Great. Thanks, Bill. And it's interesting that you say that, we talk about the greater coordination within and across the business, but really you're right. It is about getting that right information to the right people at the right time. One more thing I want to talk about is these external drivers, things that are external to the Treasury function but are impacting it. Maybe we could spend a minute here talking about some of the other needs that are driving these changes. Bill, could you help talk about that a little bit?
Sure, Kevin. And these drivers are consistent, whether it's a connectivity project or a centralization project or any other project, right? These are just consistent drivers across what we hear from corporate treasury folks, and that is, just lack of resources. Mm-hmm. The next treasury person that tells me that they have ample IT resources and, they never have a problem getting access to those resources is probably going to be the first, to be honest, Kevin.
Right.
And then the processes and procedures worldwide, right? They're sometimes can be undocumented, very inefficient. One of the processes I can think of is, a lot of organizations still rekey data into spreadsheets, and sometimes it happens throughout the organization, or even if it happens, just a few times a day, there's still that opportunity for errors, for mistakes. And just be very inefficient. It's not automated. So sure. I come across a lot of manual processes still. And then, Kevin, the final point on the external drivers is Treasury folks know Treasury, right? They're subject matter experts on Treasury. What they're not subject matter experts in, and I don't think we could expect them to be, are all the different, for example, technical standards, right? So, mm-hmm. Connecting with this bank in this encryption mode, or connecting to that service provider, or connecting to your ERP system in this mode, they're just not enough knowledge and sufficient skills in the Treasury organization. So, again, you find yourself depending on a resource that sometimes is very, very scarce.
Yeah, Bill, and these external drivers, these are common, not just to the Treasury function, but across most businesses. I think we'd all like to have an enormous amount of resources in terms of people and in terms of dollars. Unfortunately, I don't have that magic wand. So, Bill, as we move to page 6, help me think through what are some of the solutions and some of the strategies that you've seen clients select to, I guess, to help increase functionality and increase value to the organization, but I guess really to provide, greater connectivity and more robust centralization and greater control.
So, Kevin, what we've seen the organizations that we've worked with do is really tackle it in a phased approach, right? So the building block for this approach and the foundation of it is managing your connectivity better. Again, internal connectivity and external. I can't reiterate that enough that the external connectivity, there's a lot of providers and networks out there that that can provide a single point to service providers, but where they fall short is internal, right? Mm-hmm. To all those ERP systems and all those data sources that you need to connect to. Mm-hmm. And really, data needs to flow to be able to move on this kind of maturity scale, we'll call it. Data needs to flow in a single channel in an automated, secure, and agnostic fashion, right? So you need to be able to adopt new technologies or new banking relationships, or say you want to connect to a new network. You should be able to do that, but not be limited by that. Mm-hmm. And then if we look at, so now you've got your connectivity managed, right? Now we're going to move on to centralization. And really centralization we think about in 3 different ways. The first kind of phase of functional centralization is what we call a payment hub. And that's been a term that's been around for a number of years. And really what a payment hub does, Kevin, is it will help you centralize all your payments and or collections across your enterprise, right? The second stage of this maturity scale under centralization would be going the next stage to payment factory and mm-hmm. utilizing a payment on behalf structure. So payment on behalf structure would be where Central Treasury makes all the enterprise payments on behalf of their business units. So, maybe an organization has allowed business units to keep local bank accounts across the globe and they can make payments locally there. Here, you're reducing those bank accounts, and you basically have to have just a single bank account for every currency that you have. So we think there's a lot of value there. And then the third bit of centralization is really the one that you're delivering to your business units because, right, if you go through the payment on behalf of stage, you're taking away their bank accounts, right? But they still need that transactional data to do their business, right? The payments and collections and balances with that in-house bank. So the third phase is really delivering that back to them via kind of an internal banking portal where they have a single view of their data.
Fantastic. So Bill, really what it sounds like to me is, and I think you used this phrase, it's really a maturity scale or a maturity spectrum, right, where clients are taking what you characterize as a phased approach to achieving greater performance, right? And I guess, that's really our vision as well, it's Treasury Strategy's vision as well, that the Treasury function is not a cost center, it's not a profit center, but it's really a value creation center. So that really makes sense to me. So, Bill, as we move to page 7, let's do a little deeper dive here and think about connectivity first. Some of the challenges that I've heard with my clients is, there's this challenge around having these unique, novel external connections and different formats for each bank, each partner, and each payment type, right? There's a dependence on those bank-specific channels, which creates a high cost of potentially changing banks if that is something that has to be done. And then, as you mentioned before, there's that need and that lack of critical IT resources that are required to not just build, but manage the connections to your ERP system, your TMS system, your GL, what have you. So Bill, help me think about what are some of the solutions that you've seen clients adopt to address connectivity?
So what our clients have done is they've been able to consolidate all their connections onto a single platform. What that gives them from a solution perspective is a platform that can help you manage and connect to virtually any payment format out there, right? So one, maybe it's not even invented yet, or is in a region of the world that you're not doing business in yet, but all of a sudden you make an acquisition and now you have to deal with it. So a platform that will help you handle all those payment formats, and then again is agnostic to the bank, to any specific technology, and to the channel or the network. You need to be able to be independent. And the benefits they're getting are pretty impressive. And those payments that are flowing through this platform, you're able to validate those payments. So before the payment ever goes to the bank, you're able to make sure that is in the right format, it's got all the right data fields in it, and make sure it's going to go straight through. And if it doesn't have in it, this platform should be able to repair it. Talking about the internal connectivity, Kevin, people think about going down this journey and they go, man, there's a lot of work in changing, say, the ERP system or how we work with a source of data. Well, this platform should be able to do it for you, right? There should be minimal impact on those ERP systems, which would then, again, reduce their dependency on those very scarce resources. Mm-hmm. And then a lot of our customers are able to reduce their bank fees, particularly because they're bringing in their, say, transaction reporting in one place across the organization. So as opposed to, various people pulling reports from over bank portals across the world, they're able to bring in that reporting centrally and then disseminate it throughout the organization.
Fantastic. So as I hear you and I think about the solution and really the benefits is really the important part to me and really to my clients and hopefully to everybody on this call. It's really about less complexity, greater control. I would add reduced potential for error, and then obviously reduce cost. And it goes back to something that you mentioned earlier. It's about getting that right information to the right people at the right time. So Bill, as we move on to page 8, let's talk about the challenges here as we move along what you had termed as the maturity scale around centralization. As we talk about greater functionality and greater value, again, you mentioned it's a phased approach. When we talk to clients around about the questions regarding centralization, they talk about their challenges of the increased cost of payments and really the increased cost of their operations, right? Again, we're talking about the lack of critical IT resources required to help manage these kinds of changes, but then also, when you look at centralization, there's a myriad of challenges around different workflows, not just domestically, but around the globe for our multinational clients. So again, Bill, help me think about some of the solutions and potential benefits as you start to address this basic level of centralization.
So Kevin, getting in a little bit more detail about what we call the payment and collection hub is, again, a single platform where all your payments flow, right? The platform will give you a single view into any payment across the organization. So in one screen, you'll be able to track down any payment across the organization, who it was initiated by, who it was approved by, all the supporting documentation. No longer do you have to go to multiple sources to go find that information. Mm-hmm. In a single screen, you can get all that. It also enables you to standardize global formats. So again, reducing complexity is a theme that we've talked about a couple of times, right? Sure. And this will help you reduce the complexity of the multiple global formats. Mm-hmm. And then, the workflow piece, Kevin, I want to talk a little bit about that because building on what you said, I've sat down with corporate treasury folks and they've said, listen, we're a global organization. We have business units around the world, and they tell me that they have to say, for a payment workflow, for example, they have to have a workflow that's a little bit different than ours, and that's okay. But Central Treasury still requires the administration and control and visibility into that workflow and making sure that that workflow is being followed. So the platform and the potential payment hub would allow you to do that, to have different workflows around the globe, but maintain that central visibility and control. And the benefits our customers are really seeing here is first and foremost, reduce cost, and specifically around payments. There's really two cost sources for payments. There's the external cost, right? So the fee that you pay the bank or the payment provider. But there's also, like we talked about, the internal cost of, hooking into those systems, making sure the data flows. Say, what happens if you send a payment to a bank and it gets rejected? There's a cost and time that you have to go through to investigate the problem, to fix it, to resend it, right? And hopefully you didn't miss that payment and when it was due, but that could have been a possibility too. Reiterating the reduced dependency on the resources, IT, and others, this payment hub will deliver to you. And then, again, about the workflows, the consolidated, centralized view.
Interesting. Interesting. And then, Bill, as we move towards this more advanced controlled level of centralization, we have organizations that grow not just in terms of revenue or in terms of headcount, but they also grow geographically and globally. And that means greater exposure to things like cross-border FX payments and different activity in multiple jurisdictions with, different legal requirements, right? And, again, it is about this lack of visibility and control. This need for an increased view of the cross-border payments and the fees associated with those, the frustration with having global accounts that are being opened and closed and manipulated for deposits and collections, but really, it's more than just about the Treasury function. It's also about the business, right? Because the business units being affected by these kinds of changes are, they're going to be concerned that as greater centralization occurs, the units, they lose that critical data they need to make informed decisions that drive performance. So again, Bill, help me think through some of the solutions that you've seen your clients adopt and what those benefits have been that have come from those solutions.
Yeah, absolutely, Kevin. And I'd actually like to build on that third challenge that you just mentioned, and that's the business units getting the information that they need. As I said, I've been in the Treasury space for quite a while, and payment factories and the payment on behalf structure is not a new concept. I was reading articles back in early 2000s that primarily in Europe, a lot of folks went through a process of implementing a payment factory, and what they found was that they reached varying degrees of success because the value for that payment factory or the payment on behalf of was really focused on central treasury. Okay. The business units kind of felt, hey, you're taking my checkbook away, but you're not delivering back what I need, which is, the daily transactional data, visibility into the flows, et cetera. So really that challenge really, can't be overstated. But the good news is there's solutions out there. And the foundation for kind of going to this third step of the advanced centralization would be leveraging an in-house bank structure. So, that formal relationship between corporate treasury and the business units where you can have a financial relationship and flows can go back and forth, and then, you keep accounting of that. And then leveraging that in-house bank structure, let's talk about payment on behalf of. Again, you're taking the accounts away. But really what you're getting is you're getting, centralized control, and you're making all the payments for those business units. And an important point is that all that data that needs to go with that payment, remittance information or, information about that business unit to make sure that the supplier knows who's getting paid, that will all flow through it, okay? And then giving the business units that single view of all the transactions that they need to see. So the benefits to this, as you move down the maturity scale, it gets, there's a little bit more work involved, but there's also the benefits. Really, can be much greater, and really focusing in two areas. Again, reduced FX and bank fees, because if you're centrally making payments for your business units and closing those bank accounts, you're saving money. But you're also, probably getting better rates on your foreign currency for those cross-border payments, and so you're reducing costs there. And again, can't overstate giving the business units the data that they need, reducing the risk, right? So less people across the organization making payments, but also allowing Central Treasury to have that visibility and control that they need.
That's fantastic. That's something that everyone's looking for, the greater control and really the ability to audit these kinds of processes, right? But also greater visibility into organizational payment activity, reduce potential for error again, reduce overall cost, but this goes back to the point that we're making greater value to the business, and I think that's critical. So, Bill, as we move on to page 9, we just went over all the challenges, the solutions, and the benefits for the corporate treasury function in terms of connectivity and centralization. I guess my question is, what kinds of client feedback have you received as you've supported clients in this transition and really this journey to greater connectivity and greater advanced controlled centralization?
Kevin, one of the absolute best parts of my job in working with corporate treasury folks in helping them through this journey, as you call it, which I think that's a good name for it, is after the project is complete and we kind of sit down, take a breath, and go, okay, let's look at the benefits that were achieved. Were they the same? Were they greater than what we originally planned? And here's a couple of quotes that have been shared with me by some of our customers. So the first one here on slide 9 is a global advertising and media agency, and they had gone down the journey, and as they implement the payment on behalf structure, they were able to gain a full 2 days of working capital visibility by going through the POBO structure. And in this organization specifically, Kevin, they have about $60 billion that flow through that organization on a yearly basis. So I think we could all, do the math there and look at the benefits on 2 full days of visibility into that working capital and, the reduction in the cost of funds and the value in that visibility. The second one was by one of our financial services clients, and their challenge was that they just didn't have the IT folks that they used to, right? Didn't have the resources, and they felt that their cost of payments was probably a little higher than it should have been. So they went through the centralization phase, and they came back and told me, that reduced dependency on IT resources, yeah, that absolutely came into fruition. And then our cost of payments went down, and what's interesting is the external cost went down, but their internal cost actually went down dramatically because there were less payments that were being returned. All the payments that were going through the bank were flowing straight through, so they were really happy. One of the customers that is in an industry that acquires companies quite often, right? That's a unique challenge because now you're dealing with new bank accounts, new bank relationships, and they want visibility into those accounts and possibly make payments through those accounts very quickly. And prior to going through this journey, it was taking months to do that. And with the platform being agnostic to the bank, agnostic to the network or the channel now, they're able to bring in a new partner bank within weeks. So that's a clear value to them in being able to go to management and say, hey, we can get these banks up and running in weeks, not months. And then an interesting conversation I had, Kevin, with a treasurer recently that we've worked with, he shared with me that, he is now, his goal is to support the business, right, while reducing risk and increase visibility and control. And now with the platform, he's really able to do that confidently, right? He's able to give those business units the data that they need at the right time, right? The right data at the right time in the right place, while, of course, maintaining and increasing visibility and keeping that documented process. So,
fantastic. Hey, Bill, thank you so much for that. I'm going to put our mug shots up here once again. Before I let you go, I want to ask a few questions that we've received during our conversation here. I'm reading through these here. First, and this is something I'm thinking about, what types of organizations do you typically see taking on an initiative like this?
So, Kevin, as I think about the organizations that we've worked with, because the approach is a phased approach, right? It's not a big bang approach. It's not you have to do everything or nothing. Some of our organizations, again, have tackled kind of the first connectivity phase and may or may not move on to the other phases. But because it is phased, I think virtually any organization, and I hope almost anybody that's listening to us today, could benefit from this phased approach. And again, whether it be just connectivity or you want to go down the full path to payment on behalf of and delivering value to the business unit. So I think, Kevin, in my opinion, almost anybody could benefit from it.
Great, thank you. I'm reading this. The second question here, I think the questioner is asking if there's a level of, I guess, technical maturity that a client needs before they can take on this kind of initiative. Bill, is there a level of technical maturity that a client needs to meet before they can take on this kind of initiative?
Well, Kevin, in fact, I don't think there is, and we've worked with organizations that I guess you would consider very technically mature. They have a lot of systems out there, and they have standard ERPs across the organization, and they have a lot of technology there. And then we worked with organizations that don't have that, right? Maybe don't have as many systems. And I think what's interesting from my perspective is that whether you're more complex with a lot of different systems, there's definite value, and we've talked about that, right? There's definite value you could get out of this journey because you've got all those data sources that you have to hook into. But if you're less technically mature, I think there's value there too, because now this platform can replace kind of those old legacy technology or lack of data sources out there and be your kind of single view into the world of your cash flows, payments, collections, and balances.
Gotcha. Another question. This actually is my question, Bill. I grew up in the risk space, so my question is, what kind of concerns or risks do your clients face when they're taking on this kind of initiative?
Yeah, Kevin, that's a very common question I get when we first sit down with a lot of organizations, right, is what do we need to worry about as we go down this journey? And really, we share three kind of areas that need to be managed. The first one is communication. As a treasury, you need to communicate what you're trying to achieve early and often, making sure that the business units understand and the executive leadership understands what you're doing. The second is proper change management. So as you go through the journey, making sure that changes are controlled that keep the project on track, right? Because with any project, there's a chance of getting off the rails. So, making sure there's proper change management in place. And then the third would be getting the proper buy-in from both executive leadership and the business units, right? Because if they're stakeholders and if they have skin in the game, then they're going to be rowing in the same direction of trying to achieve the same things that you guys are trying to achieve or corporate treasury is trying to achieve. So really that buy-in is really key.
Great. So communication, I hear you on communication, right, as well as the change management. And I think we tell our clients, regardless of what the initiative is, to get that mandate from on high to really drive a sustainable change across the organization. So there's another question here, and this actually might be related to the first question. What kind of time frame are your clients typically looking at? And let me adjust this question a little bit because I want to think about it in two different ways. What kind of time frame are your clients looking at in terms of A, baseline connectivity, and then B, the time frame to achieve what you would consider a mature organization to be in terms of advanced controlled centralization?
So, Kevin, I think that answer is a little bit of it depends, but I'll go ahead and answer kind of more in a general sense, right? So the organizations that we've worked with in going down this journey, for connectivity, there's the it depends part is based on third-party providers that you need to work with, whether that be banks or other third-party providers that are required to get data from and to send data to. But as we sit down with organizations, I tell them, this should be in the kind of the 1 to 2 month time frame, right? It shouldn't go any longer than that. I mean, you're talking about setting up connections, and yeah, there's some work there, but I think the platform and the solution provider should be able to do that rather quickly in a couple of months. The second part of your question pertains to going further down this maturity scale and tackling kind of the bigger challenges of centralization. And again, I'm going to say it depends because there's so many requirements from other business units, and there are some requirements from your IT, right, and the folks that own those systems. Although they are minimal, you still have to get on their radar and make time and make sure that you're a priority for them. But I think what we've seen is kind of the range from 6 months to maybe a year for the folks that kind of tackle the entire approach. So, 6 months kind of at the shorter end when you're doing maybe what we would call the kind of basic centralization, and then going into advanced centralization, kind of payment on behalf of structure. I think, generally you're looking at up to a year. I mean, again, could take longer because of other, dependencies and everything. But I think as you look at this journey and as Treasury folks kind of look in the mirror and go, are we ready for this? Do we want to go down this path and get this value? I think that's kind of the time frame generally that they could look at. And of course, I'd be happy to fill in some more details if anyone had any further questions on that. But I think that's generally, did that answer the question, Kevin?
Sure, yeah, I think it did, yeah. And actually, Bill, we do have some more questions, but they look like they're going to be a little more client-specific, and I would ask that you address those directly with the questioners, which we're recording all the questions. Again, I want to remind everyone that in a day or two, all the attendees are going to receive a copy of the presentation and a link to the recording, but Bill's also going to answer your questions directly that we've received that are specific to your situation. Bill, thank you so much. And really thank you to everyone on this call today for taking the time out of what I know is a busy day to attend this conversation. We thank you very much, and I hope you have a fantastic day. Thank you.